Bitcoin gives you financial freedom if you hold your own keys. Take full control with the new Blockstream Jade Plus, the leading hardware wallet solution for investors seeking secure access to Bitcoin capital markets. Visit store.blockstream.com today to order.
Hello, everyone, and welcome to another episode of Bitcoin Capital. Undoubtedly, the main Bitcoin theme of 2024 was institutional adoption, led by the long-awaited approval of the Bitcoin ETFs, massive flows into those products. And then, as we talked about last week with Michael Moe from Cooler, the expansion of Bitcoin corporate adoption. Given how big the American pool of capital is, there is a bit of a tendency to get caught up with what's going on in the US. So today we've invited Sam Roberts, Director of Investments at Cartwright, to update us on the status of Bitcoin institutional adoption in the UK. Sam, welcome to Bitcoin Capital.
Thanks very much, Jesse. Good to be here.
Great to have you. All right, Sam, to start off with, can you give us an introduction to Cartwright and your personal path to Bitcoin?
Yeah, sure. So Cartwright, as a firm, has been around for 40 years. And our focus for 40 years has been defined benefit pension schemes. And we can come on to in a bit what the difference between that and other types of pension schemes might be. But that's been our focus for 40 years. Now, recently, we are expanding into charities and corporate treasuries and so on. So that's maybe another angle we can talk a little bit about in this topic, because how Bitcoin might fit within those different asset pools. In terms of my sort of personal journey with Bitcoin, so it probably started at the global financial crisis. That's probably the best place to start. And it was, when you have markets crashing and all these things were going on at the time, something didn't feel right. It was what was happening in the real world was disconnected and inconsistent with what I'd been taught at university through the actuarial exams. So something wasn't right, and that sparked my curiosity to explore further what was really going on. So I was searching for answers. That led me to the Austrian School of Economics. Big light bulb moment. Lots of things made a lot more sense then. I mean, there's a lot to learn in terms of the Austrian school, but it's much more logical and common sense. That then naturally led me to gold. So we're now talking probably 2010, 2011. And at that time, I would have called myself a gold bug. And then I heard about this Bitcoin thing and sort of dabbled a little bit in 2013 with Bitcoin. I bought a little bit of it, not very much, sadly, not enough, certainly. But that was an interesting process for me, because it's interesting, but it's not that helpful to me personally when I'm trying to think something through as to whether something is working in principle or in theory. I'm much more interested if it's working in practice. And so to do that, I needed to actually, get my hands dirty. I'm not claiming I understood Bitcoin in those days. And I sort of parked it and focused on my career and came back to it in around 2021. And one of the very useful, because Bitcoin hadn't died at that point, which was then sparks. I think that sparks interest in a lot of people, thinking it's a fad and then it's not. And so I did a couple of things then, which essentially cemented my view much more firmly and helped me to understand what was going on. So the first one was reading the Bitcoin Standard, which wasn't around in 2013. And that was very helpful for me personally, because I had the building blocks there. I had the Austrian economics, I had the understanding of gold as money, but I hadn't quite found what would bring those things together and make it all make sense with Bitcoin. But that book definitely did. So that's highly recommended. And the other thing that I did at the time in 2021 was I dabbled a little bit with NFTs and some of these alternative coins. And that helped me to see that most, if not all of them, are just a completely different thing. I mean, a big chunk of them are scams. or can't deliver what they're promising to deliver. Let's put it like that. But the important thing was that it helped me to distinguish very firmly in my mind between Bitcoin as money and everything else as, if we're being generous, technology companies. Right? So they're completely different asset classes. So that was a very useful process to go through. And I only did that because I got my hands dirty and bought some stuff which is now worthless. So then we come around to February 2022, and this was a seminal moment as well, because so February 2022, you'll remember Russia invaded Ukraine, but it wasn't so much that, it was more that the G7 countries froze their bonds that were technically at least owned by Russia. And that then, in my mind, reintroduced counterparty risk into government bonds, whereas before, we in our industry, we tend to think of government bonds as risk-free. We shouldn't take that too much for granted. But historically, it's made the models easier, has been the point. And so then I could see a move to assets with no or limited counterparty risk.
Yeah, no, that's really interesting. I think my journey was very similar as well. And it's kind of like not only matching what happened around the GFC with what you were taught in school, but also kind of noticing that there's things that you weren't taught in school, right? I don't know about you, but in my undergrad and in grad school, we didn't touch on Austrian economics at all. It was all Keynesian. There was, no questioning things like globalization. All of these things were inherently good, and there weren't really any other solutions or answers put forward.
Completely agree.
Yeah, so that's really interesting. So what is it like, in 2024, 2025, pitching the idea of Bitcoin to institutional investors?
Which is a bit weird in some ways. It's not something I'd ever thought I'd be doing. Go back a few years, and I was thinking, well, this is a nice thing this is very interesting. It's fascinating, something that interests me, but I couldn't see any direct link into the business world. But here we are. So it's slightly daunting, I suppose, in some ways, but it's also very
Is it still, though? I thought it would be a much easier lift now. As we mentioned in the intro, the Bitcoin ETFs were such a massive success.
Yeah, I think it's easier than it was, definitely.
Yeah.
But it's still if you come from the traditional finance world, well, certainly the part that I'm familiar with, this is a big step. This is sort of mentally and psychologically, this is a big step to something that's very different and very new, and isn't talked about in the actuarial exams. It's exactly the same as you described for your education and school and so on. It's Keynes and Friedman essentially, and that's it. It's just them two fighting it out about who's right and who's wrong. Whereas we know that the real world is quite different. So that is so it's quite a learning experience, I think, for a lot of people. But for those with a curious mind, as we know, it's a fascinating journey. You just got to be willing to challenge some of the things that you thought were true for many, many years.
Yeah, and I think you mentioned also the 2021, that was really the first cycle where you didn't have this conversation or you didn't hear this comment from people that, what if Bitcoin goes to zero? That was the first cycle where that didn't happen. There's like, okay, there could be another 80% pullback, but nobody was saying that it's going to go to zero. And I think one of my favorite reports on that, I think it was from 2021, the Man Group puts out these like notes from their desk, and they had a report called the Promethean bubble. And they said it was like this bubble, like Prometheus, that would, it said, yes, Bitcoin is a bubble, but it's like a series of 4-year bubbles. It expands, it pops, and then it expands again and it gets bigger. And I thought that's such a good description for it. And so I think we're kind of past that.
Prometheus did eventually fall from the sky. So I'm not sure if it's...
No, Prometheus was the Titan that brought fire to humans, right? And then was punished by having his liver devoured eternally by an eagle, and then it would grow back.
Okay. Oh, that's a much better analogy.
That's right. Yeah, no, that's a good one. And that's kind of how it is, right? So 2021 was, another big step for it, because that's the cycle where people stop saying that it's going to go to zero. So the pushback that you got, is that mostly from clients, or did that come from management as well?
So I think it's mainly from the management it's from the industry, I suppose.
Mhm.
So we first announced that we'd done quite a number of training sessions within the industry with professional trustees over the previous couple of years, but we first announced the pension scheme that did invest. That was in early November that we announced it, and there was quite an interesting, I'm going to say reaction. LinkedIn was probably one of the main platforms that we were using, and so there was quite a few diverse views on there, but it was also quite a good time and platform to respond in a genuinely wanting to be helpful manner to answer some of the questions that people clearly had. And it's absolutely right, they should be asking some of those questions. So I think most of the feedback I had was fairly neutral, just wanting to understand more. There was definitely quite a lot that was positive, but there was definitely a section that was quite negative.
Do you think there's a geographic gap? I mean, I spoke to, Yves Chauffetier a number of times over the years. He's an asset manager in Paris, and he's kind of described, what he sees as a pretty wide gap between the attitudes towards Bitcoin across the Atlantic, between the UK, between Europe, maybe UK, and then the US. Do you think that's the case? And that was before the US election. Do you think that's true, that there's kind of a gap in terms of interest and perception?
I think so. I mean, I suppose I'm basing that on, the fairly small, number of people that I speak to and read what they're writing. So I'm not sure how reflective that is of the whole society over there and over here. But it wouldn't surprise me if that was true. I think one thing that maybe might exacerbate that is that there tends to be a lot more anti-Trump feeling over here, again, from what I can see and read. And so the fact that he's come out, his message is a little bit confusing for people who actually understand the difference between Bitcoin and crypto. But the executive order that set out the strategic Bitcoin reserve and the crypto stockpile, other things that he said over time, there's a risk. So he's, in many people's minds, he's for Bitcoin, and if there's a problem about conflating that. Now, I hope that doesn't happen, in the sense that to dismiss the message because of the person that's saying it is a classic error.
Well, he's not exactly a Bitcoin advocate either. I'm not even sure if he knows the difference between Bitcoin and NFTs. Right? I'm not completely convinced, but I agree in the phenomenon. I mean, I'm Canadian, and I think we might get a new prime minister just because people hate Trump so much that they might re-elect actually the first British prime minister of Canada, which is kind of something bizarre. But yeah, so and what do you think? How would you describe the regulatory attitude in the UK right now? Are we heading towards more openness, or do you think kind of continued resistance? Is resistance the right way to characterize the current approach?
Yeah, so no, I think it is. It's either that or miles behind. Certainly the US. So it's probably helpful to split it into two parts. So you've got the retail and the institutional. Now, our market, we focus on advising institutions. So things are a little bit different there than they are for lots of other people who I might speak to on a more social basis, where they're coming at it from a retail point of view. So the retail is the part where it's heavily restricted by the FCA. There's very limited options, if any, actually, really, certainly on a pure Bitcoin point of view. Whereas institutions, it's not helped by the FCA being anti-Bitcoin and anti-crypto, but there's no actual rules stopping them from making the right decisions. So take the pension scheme, for example. There were lots of regulations and I think it's around how trustees of pension schemes should invest, but it's all around actually quite sensible principles. So it's making sure you're diversified, making sure you understand what you're investing in, and monitoring it, and thinking about custody, and acting as though you were a prudent man, a sort of a legal term that's often used. So if you follow those principles, then you should be okay. And that's exactly what we did. We followed the principles that are that apply to corporate pension schemes. So it'll be interesting. So in terms of how this might evolve, I mean, I think it would be helpful both for retail and for institutional if the FCA understood more what they were actually regulating and acted accordingly. I mean, one way that I sort of quite like to think about it is that, so in the UK, gold sovereigns, you've got eagles, I think, over in the States, but we've got gold sovereigns, which are
hold on, Canada. We're not the 51st state yet.
Oh, you're Canada, right? Yeah. So what, maple leaf, is that it?
I'm actually not sure what it is. Yeah, sorry.
Might be maples, I think.
I had to jump in and defend our sovereignty there. Sorry.
You're not the 51st state yet. That's the.
No, not quite yet. Yeah, no, yeah. That's a great joke, though. We love hearing that one.
It goes down really well, I bet. So, yeah. Well, for ages we were the 51st state. So, I don't know. So, where was I? So over here we've got gold sovereigns. That's our. If you want to go out and buy a gold coin, then gold sovereign is essentially the local version, and that has no capital gains tax because it was once legal tender. Actually, Bitcoin would fit very well within that kind of legal definition. And then you've got, obviously you've got the London Stock Exchange and other related stock exchanges for smaller companies, and crypto, in the loosest definition of that, crypto would fit within that kind of regulation. So I think if, and then it can be managed with, the right disclosures, maybe issuing a coin is similar to issuing a share, or if it's not, how can that be explained, and all that stuff. That split between gold sovereigns and technology companies essentially will be a much more natural way to view it, and also maybe quite helpful for the FCA in terms of it's of course easier to take an existing template and apply it to something else than to create something from scratch. So well, whether they'll hear this and act accordingly, I don't know, but we hope that the regulatory environment in the UK gets a little bit easier, otherwise we're just going to fall further and further behind.
Do you feel like you've got, I mean, one of the things I've noticed between regulators in smaller jurisdictions and kind of smaller economies and maybe in the G7 is it's much easier to interact with the regulators in the smaller countries. They're kind of interested in reaching out to business and kind of developing commercially viable frameworks. Do you feel like you've got that input with the regulator, or is it difficult to kind of communicate the value proposition to them?
No, it's difficult. I'm not sure we're small enough to meet that definition where it's easier.
Well, you might be in time.
Yeah, that's right. If we keep going the way we are, we'll be tiny.
Yeah, that's right. Hope springs eternal. Yeah. So in the Biden administration kind of infamously had choke point 2.0. And it looks like there might be something similar in the UK. Now, I'm not sure if this is FCA driven or if this is, driven by the banks themselves, but there's a lot of reports on social media about the banks, heavily censoring and restricting retail transactions. Is that done by the banks themselves, or do you think that's kind of driven by FCA policy?
I'm not sure actually. That's getting a little bit outside my area, but I mean, I wouldn't be surprised if the FCA has said something that's a little bit vague to cover their back, and then the banks have interpreted it in a cautious manner. and therefore that's why they, because obviously the banks will have their own rules based on the FCA and other regulator rules.
Yeah, I see. All right.
But,
Well, Sam, shifting gears
to be, sorry, Jesse, I was going to say that I agree that there does seem to be, I mean, we don't call it choke point over here, but a similar sort of thing. It was just trying to make things more difficult.
Yeah, I think well, that was the thing about choke point 2.0 in the US, is that there wasn't any clear guidance, and it just seemed to be being enforced by the banks themselves. And I guess probably, if you think about it, it was done by kind of informal communications from the SEC or the various regulators in the US down to the banks. And then also, I think there's kind of, I think Bitcoin is something that the banks maybe don't naturally like. That it's peer-to-peer transactions, self-custody, all of that stuff. A lot of the Bitcoin value proposition is about disintermediation. So you could see how parts of the legacy capital markets ecosystem, like banks and custodians and various roles, how they wouldn't naturally be fans of Bitcoin.
Yeah, I think that's probably true at the probably the senior levels of the banking industry. They can see Bitcoin as a threat, but I suspect that at the sort of the more day-to-day operational level, it's more about just trying to reduce risk and make life easy for them. So it's easier to turn something down than it is to let it through and then run the risk that it comes back to bite you. So if it is nefarious at all, it's unlikely to be nefarious at the sort of day-to-day level, I'd have thought.
Yeah, sure. It's kind of like the evil of bureaucracy type of thing.
Yes.
Yeah. So can you talk a bit about, I think we touched on it, you played a role in advising UK's first pension scheme to allocate 3% to Bitcoin. Can you talk a bit about that? What drove that decision? How you got to that point, and what the reaction was around it?
Yeah. So the logic is the same logic for every other investment. There are a range of options, and our essentially the way that we looked at it, we were just adding Bitcoin to what is quite a wide range of options available for pension schemes, and then we treat it like every other investment option. There's some that are clearly not relevant in some situations, and there's some that are relevant, and there's some that maybe it's not clear until you investigate a little bit further. And so one of the key determinants of that of Bitcoin in particular was, does the corporate pension scheme have a long time horizon? And so that enables us to go through our client book and narrow it down quite a lot to work out who Bitcoin could be appropriate to. And then it was a case of talking to those schemes and saying, what I've just said, basically, this should be on the list. It's an option, doesn't mean it's right for you. Should we explore it a little bit further? And I think that's probably for many the largest hurdle, because this comes out of the blue. People have got a lot of misconceptions from reading the newspapers over the years, and so quite a few at that stage were saying, "Oh no, we want to focus on traditional assets or something like that." But where things got interesting were when they said, "Okay, well, we're not committing ourselves to anything. Let's have a chat. Let's explore it further." And so our first next step was to have what is a fascinating training session, which very few people have heard anything about before. And that's simply talking about what is money. And also within that same training session, we talk about what's the monetary premium. And there tends to be lots of questions and quite a lot of interest in that. And then the following stage is then to say, okay, well, we might have done a back of the envelope look at whether Bitcoin could add a lot of value for a small allocation, so that we know it's worth actually continuing with this. But let's do it properly. Let's look at your specific asset allocation. let's look at what happens if we add 2, 3, 4% Bitcoin allocation. What's the impact on different risk measures? What's the impact on your overall objectives? Let's make sure it's worth your while. Every asset allocation decision should have some value attached to it, should bring something to the portfolio, and this is no different. And so, as an example, for this particular pension scheme, their long-term objective is to, as for many defined benefit pension schemes, is to hand over the pension scheme to an insurer as soon as it's affordable to do so, which for them do some projections, and that's 10 years away. So first of all, that's a long time horizon, long enough for this. And then we said, if you put 3% in and then it immediately falls to zero and never recovers, what does that do to your time horizon, where it goes from 10 years to 10 years, 3 months? It's obviously worse. It has to be worse because you just lost some assets. But the question is, how much worse? And then we did the other way, the better scenarios. We said, okay, what if it goes up at a similar percentage every year to how it's been over the last few years? And that then takes that 10-year time horizon to 8 years. And so what that shows is the asymmetry, but it shows it in a way that actually means something to them. This is their ultimate objective, what they want to achieve. And we've then just looked at the sensitivity of that to this small allocation to Bitcoin. There's loads more, of course, but those are, I'll pause there for a minute.
Yeah, and what do you think the overall appetite is within the UK for Bitcoin amongst these type of pension funds? And who do you think the investors are? I guess it sounds like they're they have to be longer term. Do they have any other focuses like technology, or maybe they look at it as a commodity? Like who are the low hanging fruit, do you think, for this kind of investment?
Well, I think looking at the commodity as a commodity is quite a useful way of looking at it. But we've got different pools of assets here that we're talking to. So we've got defined benefit pension schemes where they run for those viewers that don't know, so they run one portfolio of assets, and out of that portfolio, they've made certain promises to pay members a certain level of pension over their lifetime. But they manage it as one portfolio, and so things like diversification and so on are very natural discussion points within that. You've then got defined contribution pensions, which are also corporate pensions. In fact, you might call them money purchase over in Canada, and that is where the trustees are still managing the pool of assets, but the pools of assets are notionally split up. So that each member has made a decision how they want their assets invested. So they could be, there's normally a default fund of some sort, because obviously some members don't make decisions. And then there can be self-select options where if they want to be more active in terms of investment decisions, they can make them. So that's a sort of number two. And then you've got corporate treasuries, and then you've got charities. And each of those will be looking at it from an overall portfolio level. So in terms of where we see the appetite, so the appetite there's a lot of appetite there, and we expect that to grow. So it's small but growing is probably the way I'd signify it, and it's going to grow over some time. We don't know what, because I think that will be triggered by and accelerated by events that happen in markets. So if we get a market crash, and then the central banks, as I'd expect, come out with plenty of money printing to try and save the markets in inverted commas, then that may help people to understand a lot quicker that the fragility of the current fiat monetary system. Or it might take longer, or it might be a different event. We wait and see. But there'll be something because of the fragility of the current monetary system. So at some point, something will happen. It's like an avalanche that we're waiting for the last snowflake to fall on that snowdrift to turn it into an avalanche. We just don't know exactly when it's going.
And at the operational level, I mean, how are people doing order execution and things like custody and that?
So it's buying it. So for institutions, it's buying it OTC, over the counter. This particular pension scheme was £1.5 million worth of Bitcoin. That was their 3% allocation. So at that level, you're not going to move the market. Pretty much wherever you bought it. But when we bought it OTC, so it definitely didn't. You know exactly what you're paying in advance. We also did it in one go. Whereas if it was a much larger amount, we might feel more comfortable splitting it up into phases to minimise any market impact, and it's going to be pretty large to impact the market, but also to smooth out any volatility over that implementation period. So from a sort of buying it point of view, that would be that, and then from a custodial point of view, that's when you look through the risks of introducing a Bitcoin allocation. What we're talking about is buying and holding on-chain Bitcoin. Right? We're not talking about get a yield. We don't want the counterparty risk. We're not talking about playing any other funny games with it. We just want to hold it and hold it really securely. So it's all about the custody. So there's obviously various approaches out there from an institutional point of view. The one we've used is a multi-institutional approach. So 3 different companies have their own processes around holding one private key each, and it's 2 of those private keys to sign a multi-sig transaction to enable something to happen there. So that is a very secure way of holding Bitcoin, but it also is quite good because it uses the natural high security elements of Bitcoin. And that was one of the reasons why we didn't use some other options where actually they're not applying the top grade security features that are available on Bitcoin, because they want, for example, they want the same process across all of the different coins.
Exactly. Yeah.
So Bitcoin only was a very full filter.
Yeah. And the custody part must be one of the most challenging parts of getting people to allocate capital to this type of investment, because, the feel of the custodians is a little bit different than I imagine what they're just used to doing typically. Is that right?
Yeah, that is right. Although, it would take the extreme, which would be completely daft to do it at the moment, certainly, is imagine, let's say, 3 corporate trustees, and each one held their own 12 words, their own hardware device, for example. It's just not practical at all, and quite rightly, I think they feel very nervous about custodying in that way. Even though you could probably make the argument that that's, apart from the sort of the risk of the person using it, from a custodial point of view, that's pretty safe, particularly if you expanded it, the number of people involved. But it wouldn't feel right, and it would also be unfair on those people that they're not professional custodians. They're used to using fund managers. They're used to using professional custodians, and that's why this approach, on the face of it, it looks like any other fund manager, but behind the scenes, it makes the use of all the Bitcoin security options available.
And what going back to some of the pushbacks that you might get, I imagine ESG would probably be, that's a typical pushback that people give. Did you get much of that as well?
Yes. But then it's quite fun turning that on its head. Actually, if we look in more detail at this, what you've got is a headline, and we can show examples of where you'll be aware of this.
Exact opposite. Yeah,
it's the exact opposite situation. And not only is it the exact opposite, and that's often in terms of the environmental side of it, is the exact opposite, but also on the social side, because there's a lot of talk in our industry about social factors and everything, and how we must do more, or often it's how we must collect more data to show what we're doing. That doesn't actually achieve anything in and of itself. Whereas Bitcoin is incredibly strong on the social side, and so Yeah, I was at there was a Bitcoin Humanitarian Alliance launching back in, was it maybe 2 or 3 weeks ago, which is sponsored by the Human Rights Foundation. And so we could see it was a packed room. There were 10 people on stage who each were telling a story about how they had this mission. They already had this mission in a particular way. So it was refugees or particular difficult areas around the world. And then they found Bitcoin. And then they realized how valuable Bitcoin was to help them in their mission. I mean, it's fantastic to hear those stories. And yet, in all the other asset classes, it's a real struggle to find anything. But people are just not used to hearing this much good news, maybe.
Yeah. And what about managing the volatility? Like, I mean, for pension funds or more traditional investors, the volatility in Bitcoin is something really tricky. Like, you're not really used to holding an asset that can 10x in a short period of time, or they can do an 80% pullback every 4 years. How do they manage that? Do they hold it through all the volatility? Do they have strategies to rebalance or to trim? How are they looking at that?
Yeah. So the number one is making sure they've got a long time horizon. So that then takes away a lot of the angst that might be around the volatility. And then it's okay, and then you're holding it very securely. So again, that's a big tick in the box. And then the third thing is that we can put the issue, and this is a good problem to have, but if it happens or when it happens, but if Bitcoin 10x's, when Bitcoin 10x's, then you end up with a situation where your allocation, you start off with 3%, let's say, okay, we then got 30%. But that's an uncomfortable position to be in for trustees. They don't need that level of return. They don't need that level of volatility in their portfolio. So it's important to trim it from that point of view. And so we put a mechanism in place around it where we're constantly monitoring the value of the allocation, and we essentially put some triggers in place so that when the Bitcoin price hits a certain level, we'll then trim some of the portfolio, and that's to take profits, because they don't need infinite returns, but also helps with this helping to sleep at night and limiting the percentage of the portfolio.
And what about in the other direction? I think this is one of the differences in the 2021 cycle than other cycles. Is previous cycles, it was almost all retail money. And, a lot of the Bitcoin holders are, complete diamond hand psychos, and they'll ride it right into the rocks, right? The 80% pullback, and they don't flinch. But I think for institutional investors, if you start getting 30, 40, 50% pullbacks, people are sweating bullets. So are they able to ride it through that volatility? Or, I kind of got a feel that in 2021, the higher degree of institutional participation kind of exasperated what we were seeing with FTX and a lot of that volatility, because people weren't used to riding that out, and they were cutting their positions aggressively.
So in terms of that rebalancing mechanism, there's no automatic buying of Bitcoin if the price falls. I mean, there could be, that could be built in, but for this particular client, there isn't. So the default is we ride it through, or we'll discuss it, and maybe they will talk about it, but it'll be a manual adjustment.
Yeah, no, I'm sure they'll be discussing it with you. They'll be giving you a call for sure.
Sure, they will. So will they panic? I think that's the thing that we wanted to avoid. I mean, we talk. So that's the importance of the training up front. That's the importance of the written advice that we give, which reiterates rather how volatile it can be. Every time I meet them, it's mentioned the volatility. So I don't think it will scare them. In fact, some of the analysis we did, the risk analysis, we were looking at scenarios where there was a big drawdown. So it's like, I mean, we don't want anyone to panic, because then you panic sell potentially. But ultimately, it comes down to what we all know already, which is if you understand what you own, you're more likely to want to buy more if the price halves than to panic
Yeah.
sell. Now, maybe there's a happy medium for somewhere. They say we'll just ride it out, and that's okay. But yeah, it all comes down to the education ultimately.
So there's a lot of talk in the US about how, investing in Bitcoin and leveraging its kind of potential for asymmetric returns and really big price gains over a longer period of time can help with the US deficit. Could a similar pitch be made to talk about pension performance gap in the UK?
Yeah. Yeah, I think it can. And it is that asymmetry. Now we've got maybe we touch briefly on those two different types of pension scheme because it's going to apply differently in each case. So you've got so it's the defined benefit scheme. So there's 5,000 in the UK. You've got maybe half of those which are within touching distance. So let's say a few years, 1, 2, 3, 4 years of being able to hand the whole scheme over to an insurer. So their focus is absolutely correctly on that. Let's get that to the insurer successfully. Then that's the promises kept by the trustees. For those with longer time horizons, it depends on the reasons for them being for it being a long time horizon, and it may be a positive decision to do that, or it might be that you literally don't have the money, and therefore it's going to take quite some years to get to the affordability point. But there can be good and bad reasons for that as well. It could be the scheme is fairly immature. It could be that the employer doesn't have any money. So different scenarios. But the point there is that for those particularly where the employer is lacking in cash, there could be maybe 5% of those 5,000 schemes where they don't, basically they're just hoping for a miracle pretty much. I mean,
it's not a great investment strategy.
No, I mean it's not the scheme that invested in the autumn. I add, but there are quite a number of schemes out there where they're just really struggling. Things were fine. Maybe the company's now struggling. The scheme doesn't have enough money. Maybe they took the wrong side of some things, so they need something, and you've got then here an asset where only putting in 2, 3, 4% gives you that asymmetry that you desperately need to be able to pay all members' benefits. Because one of the big issues that schemes, as they get more and more mature, so there's more and more pensioners taking their pension every month, there's some maths around. Actually, you get to a point where so many pensioners are taking cash out of the scheme, you're never going to get to your objective because you just can't get investment returns high enough to even meet those pensions, let alone get the deficit closed. But I think you're right. I think Bitcoin can be part of the answer there.
And what do you think has to
the government shortfall as well? In the way that applying the bit bonds principle.
Yeah. No, I mean, like the El Salvador volcano token, the bit bonds. It's all there's actually a number of different, mostly smaller kind of countries looking at that stuff. But I think for bit bonds for the US, that makes a ton of sense to have a Bitcoin kicker on it. I think that's really interesting. What do you think needs to happen in the UK for institutional Bitcoin adoption to really take off? Is it a mindset switch, do you think, or is it demographics? Like, I feel part of this is a demographics argument where kind of, when I was at Barclays and Macquarie kind of making the Bitcoin pitch internally, it was the guys at my level and the level or two above me that got it. But it was senior management that ultimately would kind of put the brakes on things. And I think that's partly, kind of a generational thing. And I think that this has been a pitch from Tom Lee, is that, in the US now, I think 50% of the population or more than 50% of the population is millennial or post-millennial. So as those people who are digitally native get older, they just understand this kind of technology and it's just, native to them. Whereas I think people in their 50s and 60s, it's a different thing. There's more pushback. Do you think that's the switch that has to happen? Is just kind of more of these younger people need to be in kind of trigger puller positions, or what needs to happen?
I mean, I think that could definitely be one of the factors. I suppose with anything, isn't it? If you're a few years away from retirement,
Yes.
or I suppose from getting a promotion to some other body, then what's the incentive to bring in something new? Anything that's new. There's more downside than upside, so that makes sense. However, as over time, you'll get people coming into these roles who want to they've got a good few years ahead of them. They've got some good ideas. They want to bring this in as one of their ideas. Maybe younger people, but also be more open-minded to this kind of thing. I think the trend is only in one direction. It seems. The tricky bit is what's the timing of it, and that's the bit that we don't know. I think if the FCA had a more practical policy towards, and I sort of suggested something earlier on which could accelerate it, then that would help, even where that FCA policy doesn't directly affect what people are doing. So it doesn't directly affect institutions, but it does indirectly create a barrier.
It does, and certainly a barrier of perception. Like we hear this a lot in Japan, for example, that if the regulators come out and say something is permissible, then it's kind of like it gives it a bit of a shine, and it makes it okay for people to invest in, whether they're institutional or retail. There's just a lot more comfort to allocate money to it. So I think they're probably a similar thing with the FCA, and maybe that's part of the reason why they're being so cautious.
Yeah, quite possibly. I think another angle is that this is something which certainly I went through, and I'm guessing you went through, and many others have been through, which is that you have to relearn what you thought you knew. You have to turn a lot of it upside down when you're talking about it through the lens of a sound money compared to through the lens of a broken money. And so,
there couldn't be a better time for that. People are questioning everything, right? And trusted institutions, hasn't been lower in generations. So it's just a perfect time for it, isn't it? There's probably a lot of people asking those questions.
It's hard though, isn't it? It's emotionally hard to challenge long-standing beliefs.
Yeah.
But that's in many cases what is needed. People have, it's understandable. It's perfect. I've got a lot of sympathy for it. You've got people who've grown up, been trained in a certain way to think in a certain way. And now there's this silly Bitcoin idea, which is contradicting everything they've learned over their whole career. Well, obviously, Bitcoin must be wrong. It can't be their career that's wrong. That is a way too simplistic way to put it, but hopefully it gets the point across. And so, one of the ways that I try and describe it, or at least it makes sense in my head, is that it's like a fraction. So you've got a numerator and a denominator, and the numerator is the asset, equity, bond, property, and then the denominator is the money that it's denominated in, fiat, gold, Bitcoin. Now, most people in the finance industry are used to thinking of it all as one number, and of course, for all practical purposes, the vast majority of the time, that's absolutely fine. So you think about everything in pounds, you think about everything in dollars, and so there are some absolutely superb people at analysing and can come to conclusions on the numerator aspect, the asset or the liability, but no one's really looked at the denominator. And that's the bit that seems to be missing from the industry. And as soon as you start sort of challenging that, it comes out of the blue. But also then it helps to explain so many other things. I mean, so for example, you can talk about people are, that's a bubble. Just look at the chart; it's gone up a lot. It's bound to come down. But actually, then if you do the what was I looking at the other day? I think it's the US dollar in Mexican pesos or something like that. It's a very similar looking chart. But if you're in Mexico, you're used to using Mexican dollar, and we know that as money. So there's quite a learning experience to go through, which is for anyone that does it, absolutely fascinating and very beneficial to understanding the world around us. But
so basically, the denominator you're saying is expansion of money supply, right, and inflation.
Yeah. Exactly. I mean, that's the truer definition. But it's just measuring something in a different currency, in a different money.
Yeah.
That suddenly can put a very different light on the quality of the assets. And takes a different expertise and specialism to understand the denominator than it does the numerator.
Yeah, and I think until probably COVID, there wasn't any attention outside of Bitcoiners and like a small group of like Austrian finance people. There was nobody looking at inflation or the denominator, right? Just the idea prior to 2021 that there was any significant amount of inflation, people just wouldn't agree with you, right? If even housing prices are going up, kids' tuition is going up every year, and people would look at you and say, "Well, CPI is low. I don't know what to say." Right, but people on the ground could feel it. So I mean, that's I really feel like everything since COVID has really accelerated probably the investment case for Bitcoin and people asking a lot more questions.
Yeah, I think you're right. And one of the ideas that we're trying to express over here in the UK is related to the monetary premium idea, but also the systemic risk that then creates in assets if that monetary premium deflates and goes elsewhere. Obviously, gold and Bitcoin, particularly Bitcoin, are likely to be the beneficiaries of that. But we have, a lot of pension schemes or indeed corporates and charities over here. They'll have lots of equities and bonds and property, real estate. But they are all at risk of this systemic risk of the monetary premium deflating in those assets. And it could be a big issue. If you take a corporate treasury, for example, as a sort of a simpler example, they may be invested in just bank accounts or money market funds, and that's okay. They're obviously picking up that yield. But the problem is for the last 40 years or so, that was fine because inflation, at least not for that period, but for large chunks of that period, was relatively low. Interest rates were coming down and all that sort of kind of stuff. But now we are firmly, it looks to me, in an inflationary environment. And so whereas historically the corporate treasury was something that the company could rely upon to be there when they need it, and that's one of its key objectives, in an inflation environment, it becomes a drag on the business, and it's not there to support the business in the way that it should be. And that I think a lot of companies are running a huge amount of risk at the moment with their corporate treasury strategy that they don't need to be.
Yeah, I think that was the origin story for the micro strategy, right? As a melting ice cube and pushing him kind of out on the edge looking for something to solve that solution. So, I mean, that's another question. Do you see any publicly listed companies in the UK is there a possibility for them to do a MicroStrategy type strategy?
Well, there's one.
That's a ways away.
Yeah, I mean, so if you look forward a few years, I hope for the benefit of the UK that there's a lot of companies that they may not go as far as MicroStrategy is going, right?
That's probably few will.
Incredibly impressive, but it's also they're really pushing the boundaries there. So what works for them may not work for other people, but I'd hope we have a lot more companies in the UK, listed companies that are take a bold step in this direction. There is a company that's listing. I think it might have actually been earlier this week. over in the UK. And so hopefully that's the first of many. But we'll have to wait and see.
All right. Well, I really appreciate your time today. Maybe just to wrap it up, what advice would you give to investment consultants or people within the industry that are quietly considering their first Bitcoin allocation?
So there's a couple of things really. So one is do the analysis, and by that I mean do the analysis on this that you would do in the same way you do on any other asset. And a lot of people dismiss it before it even gets to the stage of crunching some numbers and seeing how the portfolio could perform with or without Bitcoin. So I urge them to actually crunch some numbers. And the other thing I'd urge them to do is to not be afraid. It can be. I've had various positive and negative messages coming over the last few months. And some of them were private messages, and they were saying, I'm so fed up with the industry, the UK pensions industry that I've been talking about. I'm so fed up with it. I just feel it's going the wrong direction. I'm going to have to do something else. Or I like what you're doing. I like what you're saying. It's really important. I don't feel I can say anything because I'm worried about my career. And so you get this kind of, which is a real shame. I mean, it's a terrible, terrible position for the industry to be in, where people are scared to stand up and say something that they believe in because they're worried about their job. So I would urge them to not be scared, to get confident in their opinions, and learn more about about what they need to before they can they stand up and speak out. But this is a big opportunity for clients. They're going to be early adopters, they're going to be laggards, but this is a really important, not only for clients but also for society at whole. Once you really get into the weeds in terms of what Bitcoin is and why and what problems it solves. So this is important. So,
well, I was going to wrap it up, but I want to ask you now, how do you see it helping society as a whole?
Well, that comes from I guess understanding how money works and how money flows through society. The current playing field, the fiat monetary system, is not a level playing field. It's the poor particularly, but also the middle class that are suffering as a result of the Cantillon effect and how money, where money starts from, where new money is created, and how that flows through. The creation of business cycles, which of course tend to affect the poor and the middle class the most. Find it more difficult to change careers or don't have careers. And so you've got all these things which are detrimental, as well as some of the things around hyperinflation and so on, which thankfully we haven't suffered in the UK. So all Bitcoin is doing is creating a level playing field, really. But that is so valuable to society as a whole, and all the cohesion and that would create by having a fair system.
Yeah, I think also another part of that is flipping the time value of money on its head as well, right? In a kind of a fiat system, people are incentivized to consume as much and as fast as possible. And when you've got kind of a hard money system, that gets put backwards. I think there's a strong ESG argument to that too, where consumption, the willingness, the intent to consume goes down significantly as well, which I think is, interesting implications for society.
Yeah, one thing I talk about sometimes, if prodded to do so, is that you've got we've had no proper savings vehicle in the UK or G7 really, around the world actually.
Yeah. And
so people, as you said, then are forced to say, well, it's going to lose its value anyway. I might as well spend it on something, and then you buy stuff you don't need. Or you invest. You say, well, I want to beat inflation. I want to invest in stuff, but I'm going to invest in stuff I don't understand, which of course completely goes against the things that the FCA might say, which is don't invest in things you don't understand, and they're absolutely right.
Yeah.
But people are forced to do that to try and beat inflation. And so, the whole sort of concept of time preference espoused by the Austrian school just makes complete sense to me. And it's not, again, it's not something that's taught in schools or in the actual profession.
No, not at all.
But it's incredibly valuable to understand how people's minds can work and why a sounder money is a sounder society.
Definitely. I think that's a great place to wrap it up. Sam, where can people go to learn more about what you're doing?
So our website, cartwright.co.uk, but also you can get me on LinkedIn. So I'm sure people will be able to find me then. So Sam Roberts, you'll hopefully recognise the photo.
Great. All right. Thanks a lot, Sam. And thank you everyone for joining the conversation. Keep up to date with Bitcoin Capital by following us at Bitfinex Securities and at Blockstream.
Bitcoin gives you financial freedom if you hold your own keys. Take full control with the new Blockstream Jade Plus, the leading hardware wallet solution for investors seeking secure access to Bitcoin capital markets. Visit store.blockstream.com today to order.